Your ability to earn an income is probably one of the biggest assets that you have. Take for example that if you are earning 240,000 rands a year, in a 40-year working period, you would have earned 9.6 million rands, assuming that you never get any pay increases or anything like that, which is highly unlikely. So you can see just how much money you could potentially make in the next couple of years. So how do you actually protect that earning potential? In this video, we're going to be talking about exactly that and how you can use income protection to protect your future income. If this is your very first time here, thank you so much for clicking on this video. My name is Tando and I talk about all things personal finance every single Wednesday right here at Small Steps to Freedom that will help you take control of your money. So be sure to hit the subscribe button so you never miss any of our content, and be sure to let us know what you think of this video at the end. What are we talking about when we speak about income protection? So income protection is a long-term insurance product that essentially covers you in the case that you lose your ability to earn an income. So for example, if you were to get ill, get injured, or even retrenched. And retrenchment here, I'm just going to highlight it quickly, has actually only been introduced in the last couple of years. Insurers never actually covered for retrenchment cover until very recently. So some insurers might actually cover for retrenchment and some might not. So you want to actually check out whether that's something that you want included in income protection. You have to check if your insurer actually covers for that as well. But that is the gist of what income protection is. But there's two categories to this that I want you to take note of. So you can be covered under on occupation or suitable occupation. And when we speak about on occupation, in that case, an insurer has to pay out if you're unable to do your current occupation. So for example, if you're a project manager and you have become so stressed that you're unable to actually carry out your duties or do your job, your insurer will have to actually pay out even if you are able to do other jobs. But this is different from suitable occupation. Going back to the example of a project manager, if you're unable to do your job because of stress again, your insurer can actually say, based on your experience, your qualifications, your skills, that you can actually take up maybe a different role in the same company or in a different company or even in a different industry. So that is the difference there between the on occupation and suitable occupation type of insurance. There's also any occupation type of insurance. This basically covers if you have a more manual work, if you were to be physically injured, for example, if you can't walk or if you can't use your arms to lift things, you then are unable to do your job. With that one, it gets a little more complex because the insurer would then do medical checks to check whether you can actually move and so on. So do a little more research on that one, as well as the other two that I already covered, but that should give you an idea of the different categories essentially in income protection. So what are the premiums and what is the deferral period? So your premiums are determined by different things. So your health, the type of occupation that you were in, the amount of cover that you want. Income protection only covers up to a certain amount of your income. So it might not actually cover 100% of your income unless if that is actually what you state when you get that income protection. So usually it covers 50%, 75%, even up to 100%, as I said, if that is what you would like. But that obviously increases your premiums as you go higher and higher and higher. And then your deferral period also affects your monthly premiums. And when we speak about deferral periods, we're essentially speaking about a period that is agreed upon by you and the insurer, where you say, okay, I am willing to wait for X amount of time before you guys actually pay out. And that deferral period, you can actually think of it as a waiting period in essence, because what the insurer then does is that when you actually place your claim and they approve it, there is a waiting period before they actually pay out. So that deferral period is agreed upon beforehand. So when you actually get the income protection, so when you apply for it, you can state that you want X amount of time. So that can actually range from anything between a week to up to a year. So you have to also take into consideration different things when you're thinking about what deferral period you want, in terms of how long are you actually able to sustain yourself before you need that insurer to start paying you out. So the longer your deferral period, the lower your monthly premiums, and the shorter your deferral period, the higher your monthly premiums would be. An important thing also to note here is that your premiums are not tax deductible. So for example, with your tax-free savings account, you can actually claim back and get some of your tax back at the end of the tax year. Or and with like your medical aid, for example, you can also get a tax refund at the end of the tax year. But with your income protection premiums, you can't claim back tax on that. And another thing that's also important to note as well is that your income protection payouts are also tax liable. So you still have to pay tax on the payout that you get from your insurer. So that is something really important to note there, is that if you say that you want your insurer to cover 50% of your income, that will still be taxed. So you want to take those calculations into account and see if that money would actually still be enough at the end of the day. So given how big of an asset your earning ability is, it is definitely important for you to consider whether or not you want to actually cover and protect that potential income. And this is something that you want to maybe even discuss with your financial advisor, because remember, I'm not a financial advisor, so everything that I'm saying here is just educational. So you want to do your own research, speak to your financial advisor, see what works for you, and whether you want to introduce income protection to your own life. And this is what we spoke about in this video. I actually also divided it up so you guys can just reference any different points that you want to go back on. But what we spoke about was what income protection is, the different categories of income protection, premiums and deferral periods and how those work, as well as tax and how it works on your premiums as well as on the payout side. But I hope that information is actually really helpful for you to actually start thinking about income protection and understanding it a little bit better. It can get really complex, so it's really important to speak to a professional about it before you actually take it out, or if you are considering taking it out. But anyway guys, I really hope that this information was helpful for you, and I will see you on my next video. But until then, be sure to hit the subscribe button, maybe watch some of these videos. YouTube thinks that you like this video, I think you might like this one, so pick and choose, or even subscribe to my channel if you're not already subscribed. But until I see you on my next video, bye for now.